We're joined by Ed Rogers. He's Chief Executive and Chief Investment Officer of Rogers Investment Advisors. Ed Rogers, thank you very much indeed for joining us. This was broadly expected, but what do you make of it?
Well, we think it's a very positive number. You know, in broad terms, I think as noted on a previous segment, to have Japan GDP tracking U.S. GDP and to have both of those economies progressing in a positive fashion is very good news right now.
Okay, stimulus package, that was broadly expected as well. Is it enough? Is it being spent on the right things?
Well, is it enough? I think everybody would like to see it be more. Is it what can be spent now is probably a yes. Will it be spent properly? Will it be spent wisely? We certainly hope so. We certainly hope so. We think that a lot rides on who wins in the Kan versus Ozawa election. That will determine quite a bit where Japan's headed for the next year, 12 to 24 months, in fact.
You're pretty bullish, and you say that it should be included in most people's portfolios. Now, it is underweight in most. Why are people getting it wrong, in your opinion?
Well, Japan's the country that never fails to frustrate and annoy investors, especially if you've been a long-only investor. You've had probably very traumatic experiences investing here. We think that you should be fully exposed, but that you should be exposed to the hedge fund industry, which in a hedged fashion is the only sensible way to approach a Japanese equities investment. And that's just not for everybody. Not everybody wants to do that, but we think that the percentage of investors that understand the thesis of how hedge funds add value in this space will continue to do very well, and that you can make money here every year, as the funds we advise have made money every year.
Ed Rogers, there is the elephant in the room. There is an overhang here, and that is the strength of the yen. Does that concern you?
It certainly is going to present a lot of problems for the exporters. It seems fairly entrenched down here, to be honest with you. I mean, even a concerted government move may not bump the yen back to anything better than 90, 91, and I think there's no guarantee as to how long they could keep it there. So I think corporate Japan is doing a lot of thinking about how to deal with the yen in, let's call it in the 80 to 95 range, or perhaps even the 75 to 95 range for the next couple of years. It's going to make life a lot more difficult for some folks. But again, if you're approaching it from the hedge fund perspective, that just means you might be finding some good short selling opportunities.
Yeah, with the yen at these levels, though, isn't it more a picture of what's happening in the U.S. rather than Japan itself?
Absolutely. It is a reflection of the relative value of the relative interest rates. It's a projection of relative estimations on where the U.S. economy is going, where the Japanese economy is going. We remain very bullish on the underlying Japanese economy. We stated to our investors that we expected a better GDP number than the street, which has come to pass. And we think that the underlying Japanese economy really has changed quite a bit in the last few years. There has been exporting of the manufacturing sector. There's been a much greater embrace of the Asian economies, selling products to China, selling products to the rising economies of Southeast Asia. That is what's going to save Japan. The U.S. number, of course, the U.S. relationship remains a very important economic one, no doubt about it. But we all know where the growth is coming from in the world, and that is Asia. And Japan is physically well located, and I would say philosophically well placed to take advantage of Asian opportunities.
Very quickly here, Ed, how important for the markets and for investors such as yourself is this leadership battle taking place?
I think it's very important. We need to understand how Japan is going to be politically focused going forwards, because the political realm and how it affects the economic policies is always very, very important in understanding the Japanese investment opportunity. We are hopeful in that both candidates are taking very seriously Japan's current economic situation and how to improve it. And I would say that that has not always been the case. So in that respect, I think hopefully investors take a little bit of comfort that we have a focused prime minister, no matter who that prime minister is, given the two candidates.
Ed Rogers, thanks a lot for that. Ed Rogers there from Rogers Investment Advisors, just looking at the investment climate there in Japan, also reflecting on that leadership battle between Nato Kan and Ichiro Ozawa.